Alright, hello everybody, Daniel Research here, back with yet another video. So I just came back uh, in my home and I've decided to do something quite different now. Perhaps I'm gonna start a new series that's gonna be a little bit more technical and trading related, because so far the last three videos that I've done were actually more so about the economic side of things, the macro side of things. Of course, in my view, the macro always comes first, right, before the technicals. But then again, if you're trading or if you want to get the best entry possible, whether that would be for investment or a trading decision, you always have to keep in mind the technicals or the technical analysis, right? So I would assume that you know the basics, right? But if you need more help with like the basics, let me know, and I'm gonna do like a separate series for the basics, right? But what I wanted to do now is actually show you just a snippet of price action from today and explain why the price action happened the way it did, right? Because I was watching it live, I was trading it live, so um, yeah, and right, let's begin. So this is the NASDAQ index. We can actually also look at the um, futures. I think it's gonna be better to look at the futures, but for the purposes of this video, let's just stick with this one. I usually look at both at the futures and at the CFD contracts, since the futures are the actual price, right? The CFDs are, you know, brokerage related, so everybody sees a different price, so it's not that reliable. And for today's purposes, I actually use the QQQ for my real-time analysis. But as you know, the QQQ is only trading during market hours, and right now we're about 1 hour and 30 minutes into the trading day. So while I can look at the QQQ pre-market data, I would prefer to just look at CFD here to just illustrate what's happening, right? So here is where we opened on Sunday, right here, with a slight gap up, and then what we had was a gradual, oops, let me hide that, a gradual increase in price. It was like floating up pre-market, quite a bit of uptrend, went up as much as 1.8% up, right? But then you ask yourself, what happened? What changed? Well, nothing has changed, right? Like everything's the data has not changed for the weekend. Okay. Um, what did change is it's not that it changed, but it's a very interesting thing. Like that last month was the first video that I made on this channel, right? We had the and then the Nasdaq's dumping as we speak here. So we had the NFP data last month on Friday, as always, right? And then on Monday we had like 6% down then on the Nasdaq. And so now when we had a bad NFP report on Friday, people assumed, okay, Monday is going to be like a Black Monday again, right? Well, you know, when people think something, when a lot of people think something, usually the opposite happens, right? So that's what happened here, right? Monday started, floated up quite a bit, but then what happened here? Okay, what happened here actually? Right, for the purposes of this video, let's use the QQQ. Okay, I know there's quite a lot of stuff here, but bear with me, I'm gonna try to explain it as best that I can. Okay, so this is Friday right here, this candle. If we take the top of the candle and the bottom of the candle, we get a range, Friday's range. The yellow line, the first yellow line here, is the middle of this range. Okay, so I've marked the middle of this range, Friday's range, right? Then what we can also do is do another range from this high here, when we had the bounce, the recent bounce, to this low right here, and we get, I know it's quite a lot of colors here, so let me just delete this one for now. If we do this, we get another range. and we get the mid-level. We mark down the mid-level, which is the second yellow line. Okay, and we get those two levels right here, which is the mid-level of those two ranges. I'll just do this one again. No, actually, let's do it like this. Okay, now going to the 1 minute chart, this is where we opened. Big gap up, right? We floated up, created some equal highs right here, and we also had these highs here. So first we took this one explosively and we started consolidating for a little bit, creating liquidity over here. And I do know that that's a concept that I have to explain another time, but I'm just gonna stick to the analysis for today's price action. Okay, so after the consolidation, you can assume that we have a lot of people that have placed their stops above this high here. So hence I marked it down. Okay, and then we get a big move up and a gap here. It's called a fair value gap, and it's basically, what it basically means is that the move was so explosive that not a lot of people got the chance to participate in this area right here. Okay, so we expect price to be bouncing off from here, and what happens? Well, bounce. Okay, and we also touched this mid-level here. So we touched the mid-level, went back down as people were shorting this level, went back down, but we couldn't close below the level, right? Below the gap. Then boom, once again against the level, go down, touch the previous high that I told you about right here, go up again, smash this level, go down again, pierce the gap again, but again we couldn't close below it. Okay, so it's still a valid gap. Then explosive move up. Okay, explosive move up above this level, and now once we are above the mid-level, as we are seeing here, what I was looking for is whether we're gonna deviate from the level, right? Because if we deviate from the level, then that's a setup, right? That's a setup, and if we deviate from the level, oops, we can expect a move down. But then again, if you want to place a trade, you always have to have several confluences. Okay, so what happened here? Well, we deviated, went up, people started longing this because they thought, okay, we are above the mid-level, so we're gonna long, and of course we went down, right? And then we're looking at this gap again right here. What happens? Boom, smash above. Couldn't quite close up below it, but then it did. Then it closed right here. So that's the second confluence. Okay, then if we go to the 5-minute chart, we can see we created another gap here. So this is gonna serve as a resistance, as an area of interest, so to speak. Okay, but what happened after we closed here? Well, straight down, right? And of course, it's still just 1 hour and a half in a trading day, so anything can happen. We also have an Apple event. This is Apple's chart right now, bouncing on my level. It's down 1.3%. Nvidia couldn't get above the 0.75% out here, but it's still up. Okay, and essentially, oh, let me show something else very, very interesting. If we take the Friday's range, this -1, -2, -3, -4, those are standard deviations from the range. All right, you ready? Look at this now. The first standard deviation is this level right here, which is a key level. I can show you why it's a key level. It's not just this, but this is very interesting. But this is a key level, okay? And not only is it a key level because of another factor, but it's also a key level for serving as a standard deviation, right? Then second standard deviation, this low right here. Third standard deviation, this low right here. Fourth standard deviation, these lows right here. Fifth standard deviation, these lows right here. I mean, tell me that that's not interesting, okay? This is perfect, perfect. I'm not gonna say consequence. I'm just gonna say, you know, I don't even know what to say. It's like just it's very nice. Okay, right. Okay, let's just get rid of this. And now let's see what's gonna happen today. But this is the daily chart, so you can see it opened up green, but then now it's not looking so great. But then again, it's just the beginning of the week. We have CPI and PPI data on Wednesday, and yeah, I mean, this is why it happens in such a way, because we didn't have a lot of data today, so the algos just wanted to make people think that it's going up, and it might as well, right? It might as well. It's not saying that it's gonna go down today more, but it might as well, right? That was just like a analysis for the price action that happened till now, and since we didn't have any news, there was not a lot of volume, right? When there's not a lot of volume, there's not enough liquidity. Institutions are trying to create liquidity by pushing it to one side, right? Because it's pretty easy to push the price when there's not a lot of liquidity and volume in the market. All right, guys. Thank you so much for watching. Let me know if you want me to make more technical videos, more technical analysis, or explain stuff. And don't forget to subscribe, like the video, and see you guys in the next one.